edition of Market View, the first for the week and the first for the month of August, right here on Eswatini TV. I am Nothless totally glad to have you on the program. Recently, the Eswatini Competition Commission strengthened its regional footprint by signing a letter of intent with the Center for African Fintech Innovation and Law. The agreement seeks to advance collaboration in areas such as research, policy development, advocacy, and capacity building and innovation. Now, the growing concentration of market power, the control of consumer data, digital payments, ecosystems, and cross-border financial services are changing how competition is defined and, most importantly, regulated. The fundamental question around the rapid rise of digital finance is if this partnership can help create a more competitive, innovative, and inclusive digital market. Join me for a conversation with Chief Executive Officer of the Eswatini Competition Commission, Siboniseli Zulu Simelane. But first, let's get you up to speed with some of the latest in business. In our business news, the World Bank has recommended that Eswatini invest heavily in agro-processing to boost the economy. This is according to the Eswatini Agriculture Sector Review Report on catalyzing agri-food system transformation, which was briefly unpacked by the Minister of Agriculture, Honorable Mandla Chauka, during an interview with Eswatini TV. The report forms part of the National Strategic Dialogue Transforming Agriculture and Agribusiness in Eswatini, hosted by Government of Eswatini and the World Bank, taking place on Wednesday and Thursday this week at the Happy Valley Hotel in Eswatini.
For instance, the issue of agro-processing. We have always said that it's important for us to scale up on the agro-processing front as a country, because we normally produce stuff but are not able to add value to it. We've got a lot of farmers, for instance, that produce tomatoes. But some of these tomatoes find their way across the border to South Africa, and then they come back as tomato sauce. And then we buy the tomato sauce or the tomato paste. The question is, why can't we then produce the tomato sauce in the country? Because that will create more jobs. That will create, that will also retain the wealth in the country. We have some farmers that produce groundnuts, but we don't make peanut butter. We buy the peanut butter from across. The differential between the fresh produce and the finished product is so huge that the value really is in the finished product. Same thing applies. We are currently self-sufficient in pig production. We produce enough pigs in the country to feed the whole nation, to the extent that we export some of the meat. But the issue is, we should actually be making bacon and some of these high-value sausages. We are still not there. That is where the value is lost. That is where the money escapes the country. We need to arrest that and bring the revenue home by making sure that we scale up on agro-processing. We also talk about technology. We have always said that it's time that we use technology to deal with our farming operations. We need to use NDVIs, we need to use drones to manage some of our operations. We need to use probes to check the soil moisture content, and also to take nutrient contents in the soil. What currently happens is that our farmers take up samples from their fields. They take the soils to Malcans for testing. That is a long process. Technology now exists where you can just use probes in the field and you know the results instantly. That is where we need to get to. And then the issue of funding. We have always said that farming is a business. It needs to be funded. We need investment. And that is why as a ministry we started probably introducing the Eswatini Agricultural Development Fund. But it's not enough. We need more funding. We need creative solutions to the risk of farming. A lot of banks will say, look, farming is too risky and whatever, but there are ways of reducing or mitigating that risk or de-risking the industry. So we need to do that. So we need to industrialize, and we need then to be able to do all these things. The biggest elephant in the room is climate change. And again, climate change is devastating our farmers, but we need the technology or to adopt technology that deals with that kind of thing. Some of it is not even technology, it's just basic infrastructure. Currently, we are working with the rest of Cabinet to put together a plan that is going to put the economic development of this country on an upward trajectory. So within that plan, we have the agricultural sector also being included.
The Ministry of Agriculture, in partnership with the World Bank, will be hosting the National Strategic Dialogue, Transforming Agriculture and Agribusiness in Eswatini, taking place this Wednesday and Thursday at the Happy Valley Hotel in Eswatini. The first part of the discussion is the Eswatini Agriculture Sector Review Report by the World Bank, which the Minister has briefly unpacked in our first report. Honorable Mandla Chawoka elaborates further on the discussions of these high-level meetings.
The second part of the meeting is what we call the agricultural marketplace. So there it's bringing together the stakeholders in the agricultural value chain. We are going to have farmers, we are going to have agro-processors, we are going to have retailers, we're going to have funding institutions or financial institutions, and everybody who plays a role in agricultural development. The purpose of that is to interact and then exchange ideas and find a way that we can seamlessly take forward the mandate of His Majesty in terms of making sure that all Maswati are able to have enough food on their tables, we are able to achieve food sovereignty, and then we are able also to create wealth in terms of the farming sector. That is why agro-processors for us are very important, because we believe that we need to escalate in that area. It's one of the biggest shortcomings we still have. We don't have enough agro-processors. We want to increase that and so that we are able to add value to our produce and also able to provide a guaranteed offtake for the farmers, and then ultimately also be able to increase the shelf life of our produce and make our produce ready for the international market, because it is only after processing that you can make sure that the produce gets into the international market still fresh and ready for consumption. So we are bringing those stakeholders together, and then some farmers will be showcasing what they're doing. And one of the other important things is that we want to demonstrate the level of technological advancements that have taken place in this country, because agriculture now is not just about tilling the soil or taking a hoe and digging a few holes in the ground and then putting in a seed. No, farming is actually a business, and farming involves technology. We've got all sorts of advancements in the fourth industrial revolution, which therefore allows even the youth to participate fully.
And you're up to date with some of the latest in business. After the break, we'll speak to Chief Executive Officer of the Eswatini Competition Commission. This is Market View.
QR-coded permits make the verification quick and easy. Always double-check your HS codes and quantities for smooth compliance. The process is simple. Step 1. Submit your completed application form. Annex A with product line items for TVs, decoders, and commercial invoice. Step 2. Eswatini TV reviews and approves. Step 3. Make payment and complete verification. Step 4. Receive your permit. Step 5. Clear customs smoothly at the border. Make sure you have all your required documents. A completed application form. Annex A detailing your product line items, commercial invoice, valid TV retailer license, and letter of authority if applicable. Our permits feature QR codes for easy border verification. For assistance, email us at license@eswatinitv.co.sz or call our help desk. Apply before your shipment arrives. Ensure compliance and avoid delays. Remember, all TV sets and decoders entering the Kingdom of Eswatini must have a valid ESTVA import permit. Thank you. Act now.
Welcome back. You're still watching Market View, and moving on with the program. The Eswatini Competition Commission, ESCC, has strengthened its regional footprint by signing a letter of intent with the Center for African Fintech, Innovation and Law, CAFL. The agreement lays the foundation for collaboration in research, policy development, advocacy, capacity building and innovation at the Stellenbosch Institute for Advanced Study in Cape Town. Joining us now to unpack the contents and significance of this letter of intent is the Chief Executive Officer of the Eswatini Competition Commission, Siboni Selzulu Melane. Ngoni, good afternoon. Thank you very much for your time. Maybe you could just take us through the motive behind this letter of intent. How will it help Eswatini develop a stronger regulatory framework for fintech and innovation?
Thank you, Notsile, and thank you for having the Competition Commission join Market View again. So the Center for African Fintech, Innovation and Law is housed under the University of the Western Cape, and they are looking at how policy and law and the regulatory framework interacts with fintech. And so through this letter of intent, what we are hoping to achieve is collaborations. We want to be able to do joint research as appropriate, but also be able to get policy-based, evidence-based contributions to policy and regulation. So this letter of intent, although it was signed between the Competition Commission and CAFL, it is an opportunity for Eswatini as a nation and all our regulators that are relevant when it comes to the fintech space to be able to tap into the research that they have, tap into the expertise that they have, so that when we develop our policies, when we enforce our respective laws, we can lean on to the experts and the work product that the center has.
This will see collaboration across areas of policy, research and capacity building. What exactly or what specific programs or projects will emerge from this letter of intent or collaboration with CAFL?
So first of all, we will have engagements with stakeholders like the one that you mentioned, which we had at the University of Stellenbosch last week. So this was a conference where regulators, business players in the fintech space, they came together to discuss the emerging issues in fintech. So engaging with stakeholders in a focused space to discuss what our issues are from our different perspectives, and then sitting together and having discussions about how to make the space better, how we can encourage competition, how we as regulators can understand the business case, because fintech is very new to all of our markets. We're trying to understand how technology is enabling finance, how it is enabling our daily lives. And so it is important for us as regulators to understand the business case, to understand what they look at when they are innovators and they are coming up with mobile applications to make our lives easier, to make it easy for us to pay for things. So coming together with stakeholders in workshops and conferences to have discussions, that is one of the outcomes that we are already seeing since signing this letter of intent, but also coming together to collaborate on any research efforts or any policy briefs. When we see developments happening in the space, we can see Google was recently penalized by the European Union. The American Department of Justice is also investigating them. COMESA has an investigation against Meta. So for us as regulators to understand what all of this enforcement looks like regionally, sometimes we will need to get in touch with academia, get in touch with researchers to understand how our markets fit into the global discussion. And so when we have a collaboration with a center like Fintech, we can benefit from understanding from their research how our markets are affected, and then we can design our enforcement and interventions in a more nuanced way to understand our context.
Nguni, globally, regulators are kind of paying a close attention to market dominance by especially large tech companies. You've highlighted Google that was investigated. The likes of Meta and Amazon as well have been investigated. How will this collaboration support local fintech startups and smaller businesses in accessing opportunities while at the same time preventing anti-competitive practices by the bigger players?
So the research that the Center for African Fintech Innovation and Law supports looks at, importantly, the market structures. The abuse of dominance, it usually comes out when there has been an enforcement case in the different jurisdictions. Then we look at whether there has been any barriers in our markets that signal that there's an abuse of dominance. But when we look at the research, because the research is proactive, the research is saying, what are the issues that our innovators are being faced with in the market? And we are able to then engage the market in a proactive way. And so when we look at what is happening in the fintech space, innovators have to be able to enter the market and see if their products and their applications are really developing and making it possible for us as consumers to be included in the financial space. And so collaborations will allow us to, number one, have a look at the research that is emerging and to see what are the barriers that we have to look at as competition regulators, as well as the other regulators, but also just to understand if the innovation really is making a difference. We talk about inclusive financial growth. Access to the fintech space doesn't mean that it's inclusion. It has to be meaningful. When you make something available on your mobile device, you are giving access. But is my grandmother able to use it? That becomes inclusion. Is somebody who is differently abled able to use it? That becomes inclusion. So centers like CAFL look at whether this innovation really is inclusive, what it means to the ordinary consumer, and then we can, as regulators, see whether to intervene, importantly how to intervene. If we have to bring down barriers, if you have a platform that introduces a new payment in the country, how does that platform interact with the commercial banks? How does that platform interact with the payment system, right? So those are some of the things that we would have to understand so that we can make sure that any barriers are eliminated and that the competitive space is open for innovators to bring their products to market.
On the element of inclusive financial growth, how do you see the Competition Commission playing a part or preventing the dominant firms from excluding smaller innovators without really discouraging investment?
Yeah. So it has to be a collaborative effort because we regulate the competition and consumer protection side, but we do have regulators that look at the technical aspects on the financial systems, the prudential systems, and the payment plans. So it is a collaborative effort, and we have to ensure that there are no artificial barriers, okay? Yeah. So the rules that the payment system has in place, does it allow Lastole to develop a platform to make payments easier from Manzini to Hoho region, for example? And are there any terms and conditions in these platform contracts that make it a barrier for you to sell your product to multiple commercial banks on the market? So we have to come together as regulators to say, what do the barriers look like and how can we bring those barriers down?
Sorry, my final one, Mnguni.
Yeah.
What opportunities does this partnership bring for local entrepreneurs and fintech startups?
So the opportunities will be the benefits that we derive from this kind of innovation. So we will be able to identify what are the hindrances in the market to innovation, and we will be able to have a discussion about what does the fintech space look like in Eswatini as all the regulators. Sure. We can all come together and say, given our respective mandates, this is what the space looks like, and this is how we can each intervene and work together so that the innovators can be encouraged to bring a product to market, and they know that there will be uptake and that there won't be any abusive practices by the incumbents.
Nguni Wulevicha, thank you for coming to our studios.
Thank you, Mtiana.
That was Chief Executive of the Eswatini Competition Commission, unpacking the strategic meaning behind the letter of intent signed by the Eswatini Competition Commission together with the Center for African Fintech, Innovation and Law, that is a CAFL. This is Market View. We're back with in-house economist Annalise Bia after this.
Those that
are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back. I'm moving on to our market analysis segment. In-house economist Annalise Bia joins us virtually. Mr. Bia, good afternoon. How's your Monday going? So President Trump signaled progress towards talks with Iran, easing fears of a prolonged energy supply or energy crisis, rather. Have the markets reacted or responded much to this?
Good afternoon, Notsile, and a happy new month to you and the viewers. So when we're looking at the movements in markets, Notsile, that's precisely what is moving markets in today's trade. You know, it's that somewhat of a return to diplomacy between the US and Iran, and we're seeing markets really reacting relatively positive to that. And we're also looking into the earnings season, which is about to ensue earlier on this year, this month, and we're looking at that also relatively driving markets upward in terms of just bringing back the momentum. And then we're also looking at the fact that markets are still dealing with those AI valuation fears and those AI trade stocks fears them, and we are seeing that also just coming into show in markets today. But overall, we're looking at a good close to the month of July, and we're looking at a positive opening to the month of August, with the Dow Jones Industrial Average in the US, closing up 276 points in trade. The Nasdaq Composite Index closing 251 points in trade up, and the S&P 500 closing 52 points up in trade. And that's largely driven by the fact that we're seeing that return to the diplomacy table between the US and Iran, and then also the fact that we are waiting for earnings to come in. We're expecting big names like your Tesla to actually be coming up with their earnings report, and the bankers as well are expected to also be coming up with their earnings report. And we expect, after that, somewhat lukewarm reading of inflation. We do expect the inflation fears and the interest rate fears to actually continue subsiding going into the month. But coming into Europe, what we're seeing in Europe is basically a bit of a normalization in London. London basically staying on the 10,800 max, losing just some 5.4 points in today's trade, not just on the background of that return to the diplomacy table. And we've seen the price of Brent crude oil coming down to the lower 80s, to sit on the 83.39 per barrel mark, and that's supporting markets for favorable movements. In Germany is up 355.92. Remember, Germany is an exporting economy, and France has broken records. We are sitting at 8,623.34. France, in terms of all share volumes today, is per share. Now that is basically just showing that we are seeing a bit of return to those luxury brands, consumer staples that France is well known for, and that just shows that markets are expecting, the inflation troubles to ease out over the coming month. And then coming into Asia, the Nikkei is down 607.12 in today's trade. No, still sitting on that 63,000 mark, largely due to the fact that we know that the Nikkei is a tech-heavy index there, and we know that you have a lot of those AI valuation fears, and also the fact that we are looking at this overall weakness when it comes to the yen. And we've seen that in the last month, the Bank of Japan actually hiked interest rates. So we're seeing markets trying to take that into strides and trying to think around that and what it means for their trades going forward. But in the news around the war, we're seeing that shift from that 61,000 mark to that 63,000 mark. So overall, a positive movement, just closing slightly lower than the daily highs that we've seen on the Nikkei. In terms of the Hang Seng there, the Hang Seng is back on a 26,000 mark, which is a record, 124.97 points up. And now that's actually just driven by the fact that we are seeing oil prices coming down, and we are just looking into a favorable earnings season. And then in terms of the Shanghai Composite Index, we're down 22.26 points in today's trade, still above the 3,800 mark. But the data coming out of Beijing, really out of the mainland, really is showing that those structural weaknesses do remain within the mainland, in the mainland economy. In terms of the JSE, JSE is up to the 111,000 mark, basically just flatlining as of time of quote, but we can see that positive movement upwards, driven by those news in terms of Russia and in terms of Tehran and Washington. The Eswatini Stock Exchange will remain relatively mute at 501.77, and the commodity sector, you can see the gold is down 1.6 points, but still above the 4,100 mark, and Brent crude oil is also down $83.39 per barrel, following those news coming out of Tehran and Washington. So we're seeing that, once we see inflation fears coming out of the market, gold also tends to take a notch down. In terms of the currencies, the Langeni is relatively weak against the dollar, trading at 16.50, also relatively weak against the euro, trading at 19.01, and also relatively weak against the Japanese yen, trading at 19.52. Now that we are seeing a bit of a return to normalcy, and we're seeing currencies stabilizing around, emerging advanced economies. Thank you, Natalie.
Thank you very much for your analysis, Mr. Spear. That was economist Anela Sibia chiming in on the day's trade. This has been Market View. Thank you for your company. Until the next edition. Bye-bye.